When it comes to YouTube, I read every single comment as your feedback is important to me. When someone asked if I could do a video on Brookfield Asset Management, how can I not give the people what they want? In this video, we will deep dive into Brookfield and the various stock offerings they provide, and we'll begin right now. Brookfield Asset Management is a huge Canadian investment company based out of Toronto, though their reach is rather global. When I say huge, they have more than $725 billion under management. Holy banana bread. What sets them apart is that they do not simply invest. They also like to acquire and develop various projects within everything from real estate and private equity to infrastructure and renewable power. A few examples of what they are up to include large-scale development projects in Manhattan, the acquisition of GrafTech, and they operate 4 large-scale container terminals in Australia. Their overall goals for their investors is to provide long-term returns with strong downside protections. This is all accomplished via pension plans, endowments, foundations, sovereign wealth funds, financial institutions, insurance companies, and the private wealth channel. With the fundamentals, we will look at the company as a whole, and then we will look at some of the various investment options we have on the Toronto Stock Exchange. Brookfield Asset Management as a whole is not looking too shabby. Their valuation comes in at $345.72 billion. Their overall price to earnings ratio is 23.78 with a price to book ratio of 2.05, meaning they are valued about twice their book value, which means you're buying their stocks at a premium. Their revenue for 2021 was $81.28 billion with a net income of $3.79 billion. Their total debt is $187.74 billion. In a nutshell, this shows us a fairly, roughly, almost fairly healthy company with some debt, which is normal, and, they do have a good cash flow. However, the price to book does concern me a little, as I prefer to get a better deal on my buys. So let's look at some of their individual offerings, and in particular, focus on their returns. We will start with Brookfield Asset Management Inc. Class A shares with a ticker of BAM.A. These shares are their common stock. They are available on Wealthsimple, though their preferred shares version is not on Wealthsimple. Each of the stocks we are looking at today also have preferred shares, all in the same boat with Wealthsimple. A preferred share is a share that has preferential dividends over the common shares, meaning in hard times, they are paid first, and if any dividends are cut, they would be on the common shares. For this video, I am just looking at their common shares. So, back to BAM.A, their yield comes in at 1.131%, paid out quarterly in the amount of 14 cents USD per share. Yes, this is another one of these American dividend companies, so there will be conversion fees, of course, involved. In terms of growth, we have a return on investment in the last 365 days of 5.3%, and that gives us a total return of 6.4%. This is a little low, and a good reason for that is the current downturn. Up next, we have Brookfield Renewable Partners, LP, with a ticker of BEP.UN. This is Brookfield's renewable energy sector, which has not done as well in the current energy boom as I would have liked to have seen. It really goes to show that for time being, oil is still king of the mountain. Their yield is 3.61%, paid out quarterly in the amount of 32 cents USD per share. In terms of growth, we have a return on investment in the last 365 days of negative 5.1%, and that gives us a total return of negative 1.5%. Even with the downtrend we are in, this is rather disappointing. This is a stock, in my opinion, I do not have a spot in my portfolio for. Next, we have Brookfield Business Partners LP with a ticker of BBU.UN. This stock covers their business services as well as their industrial side. Their yield is 1.084%, paid out quarterly in the amount of 6.3 cents USD per share. In terms of growth, we have a return on investment in the last 365 days of, wait for it, negative 76.1%. And that gives us a total return of negative 75.0%. Holy banana bread. This is not good at all. This is turning into an episode of stocks I do not want anywhere near my portfolio. However, In their defense, their stock price was cut in half since November. At that point, they had an ROI of 55%. If you remember the high price to book ratio, a fall like this is not as out of place with an overvalued share price. In other words, all of this drop may not be the downturn, but also a wee bit of a price correction as well. Next, we have Brookfield Infrastructure Partners LP with a ticker of BIP.UN. They are fully into the infrastructure side with a focus on utilities, transport, midstream, and data. Their yield is 3.52% paid out quarterly in the amount of 54 cents USD per share. In terms of growth, we have a return on investment in the last 365 days of 19.5%, and that gives us a total return of 23.0%. Phew, now that looks a lot better. I like that the downturn we are in did not devastate the stock, as it did, well, some of the others. We had a chance to look at 4 of their offerings, with 2 winners and 2 losers. With the losers, if you have high conviction in renewable energy, that is a stock that will most likely rise on the other side of the energy boom, or when oil gets so expensive, more people begin to focus on renewables. As for their business partner stock, I must think with the overall backing of the company, this is a stock that will rebound eventually. Being so far down, it could be an opportunity to ride it back up. Personally, I just lack the conviction to do that. It doesn't mean I am right. It could mean I am an idiot if it rebounds big time and I miss the train. My overall opinion with Brookfield is that it is not a company for me. Do your own due diligence, because maybe it does work for you, and that's okay. Also, when I say it is not for me, that is based on where it is right now. Maybe in a year, the fundamentals will excite me more and I will change my mind. Of course, when it comes to your mind, I am only the beginning of your research, and a financial advisor is the end. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.